Hi everyone, and welcome to Thursday where we do share and review. Today we're going to take a look at ANZ and we're going to look at it on both the New Zealand Stock Exchange and because it's dual listed, also the Australian market. I've had a great request come in wanting to know whether the impact of dividends affect this share and how they look on both exchanges and if there's any arbitrage opportunity. Before I do that, I just want to let you know about my free 1-hour webinar that I've got coming up on the 25th of June. It's on KiwiSaver and Retirement, and I know you're going to love it. And I'd love for you to join me. The link for that is below. Right, before we jump across and look at ANZ, just the normal housekeeping as well, that this is for educational purposes only. No way is it intended to be personalised financial advice. For that, you will need to go and have a chat to your own financial advisor. Right, let's get started. First of all, I've got ANZ, the New Zealand listed share up here on the screen. And you can see that that's currently trading at $31.44. We've actually had the 4 last weeks in a row where it has fallen. It has closed lower than it's open for each week previous to that. Now, if you look down here, we have got a dividend date. And so that went ex-dividend on the 12th of May this year, so only a couple of weeks ago. Now, that can sometimes have an impact on any share. When it goes ex-dividend, quite often the share will fall a little bit before potentially it could rally again. And didn't really do that back here last year, but it certainly has this time. If we take a look again here for this one back in November 2013, yeah, it did come off a little bit before it had quite a strong run up again. Do the same here, which was May 2023. Yes, you can see that the share fell a little bit, went sideways, and then we had a bit of upward movement. So it is quite common for a share to fall for the next 2 or 3 weeks after a dividend has been announced. And the reason for that is because there are people out there who will invest purely in a share for the dividend. So they may buy it the day prior to it going ex-dividend and then selling it the day after, or even buying it the day that it does go ex-dividend. Okay, as long as they're holding it as at close of the date that it goes ex-dividend, then it means they will receive the dividends on that share. Now, that's not a strategy that I get into, so I can't really provide too much information on that. Whether it's beneficial for these people, who knows? Let's just take a look at the daily actually and just see when it went ex-dividend. To me, it's quite a risky strategy because if you bought it, say on the 12th of May, and then it's gone ex-dividend on the 13th, it had an open of $32. It had a high of $32.25 and a low of $31.55. And it ended up closing at $31.80. So depending on where you bought it, then the following day, you'd have to be timing it very, very well in order to make money on it because it had a high of $31.82, had a low of $31, a close of $31.20, and it opened at $31.16. So you'd certainly have to be watching and paying special interest if you were just trying to invest in a share purely to capture those dividends. In other words, buying it one day, holding it overnight, and then selling it the very next day, because there is a lot of risk involved with that. Like I just said, not something that I do. Right, let's put the moving averages on this and see how it looks. So we'll put on our 30-week exponential. Okay, so for me here, ANZ, you can see, is trading below that 30-week moving average on the New Zealand market. So for me, that immediately says, hey, no, we don't want to go any further, because shares can keep falling for a long time when they're below the moving averages. So that's why it's something that I certainly don't look at and trying to guess where bottoms are. We'll also put on the 15-week moving average and just see how that compares. So looking at that blue line there as well, it is trading below both the 30 and 15-week moving averages. So again, for me, definitely not a share that I would want to be jumping into at this stage. If I held it, I'd still be comfortable in holding it as long as I had my stops in place, but it's certainly not something that I'd be looking at this stage. Let's take those off. Now, let's just jump to the ASX market. So here you can see that ANZ The pattern looks fairly similar. Obviously, the price is different. It's currently trading at $28.98 versus on the New Zealand market, it's $31.44. Let's just pop in, I've just used the ANZ foreign exchange calculator. So at $31.44, which is what the New Zealand share is trading at, if I was to transfer that into Australian, it would cost me, before fees, of course, $28.76, just based on the ANZ currency calculator. So that's potentially 22 cents difference, because if I go back to the Australian chart, you can see it's $28.98. So you've got roughly 22 cents there that you could potentially be making some money on before you look at bank fees for transferring the foreign exchange. And also, the other thing you need to take into account is brokerage on obviously both platforms, because this person was asking, could you do an arbitrage trade? In other words, you buy it on one exchange and sell it on another. Potentially, yes, you could do that. You definitely need to use stop losses. Again, it's not something that I've looked into, because to me, it's just too volatile to do that with any share, because you've got to take into account the currency conversions, the fees associated with that, and then also your share trading platforms that you're using and the brokerage fees, because those brokerage fees do add up. So, but potentially there could be, but you definitely need to do your research and you definitely need to use stop losses. Now, I'm going to go back to the ANZ New Zealand one. Let's pop a comparison on here and see how it compares to the Australian. So we'll pop in ANZ. Right, there we go. So that red line is the ASX Australian version. And no surprises, it's absolutely mirroring what's happening in the New Zealand market. And that's what you'd expect, even though it is dual listed. So you're not really seeing that one market is potentially outperforming another. They're running identical. It's the same shares. Obviously, the dividends and things are announced at the same time. It was announced here, like I just said, the 12th of May this year. And if I go back to the Australian, you can see here, 12th of May, it was announced there as well. So you're not seeing any difference in the dividend dates. The dividends, obviously, they are the same, but they're just accounting. So it's an 83-cent dividend there on the Australian market and an 89-cent dividend on the New Zealand market. And that's just purely because, as at the time that they announced the dividend, that it takes into account the currency conversion as at that time that they announce it on the share that we're looking at being ANZ. So there's not really technically any difference in the dividends. And neither, like I've been saying, neither the share price. The other thing you do need to take into account as well is foreign exchange movements, because obviously that can impact any potential gains or losses. And the thing that you need to be aware of too is what trading platform are you going to use, because there are some trading platforms out there that will allow you to buy shares in both the New Zealand and the Australian Stock Exchange. However, once the share has sold, say in Australian dollars, they will automatically convert that money back to New Zealand. So you could have potentially made a gain on the share that's held in Australia, but depending on how the cross rates are sitting, you could end up making that into potentially a loss, or certainly lose value depending on our cross rates. So that's something that you do need to take into consideration. If you were looking at doing an arbitrage, in other words, buying on one market and selling on the next, in my view, you would want to use the same broker platform. And you would also need to make sure that, because currency does have an impact on the share, then in my view, you would want to make sure that the broker you were using would allow you to hold that money in Australian dollars for whatever you were doing on the Australian market, so that you weren't transferring it back to New Zealand all the time. By the time you take into account the brokerage, the foreign exchange rate, then you've got your brokerage to get out of them whatever trades you're in. Then if they are automatically transferring that money back to New Zealand dollars again, there's foreign exchange fees to consider. So a lot of those fees could potentially wipe out any potential opportunity for arbitrage or gains in there. I know that there's a trading platform that I do use they have everything based in New Zealand dollars. So even though I might buy a share on the Australian market, it's always converted automatically for me back to New Zealand dollars at the time that I'm even buying that Australian dollar share. For me, you'd need to do your research, but if you're looking at a share that is dual listed, I mean, we've only looked at ANZ in this example, and it is doing exactly the same on both exchanges, the ASX and the New Zealand market. So I really hope that's helped. It is certainly a very good topic, and I'd be keen to hear how you get on, because like I say, arbitrage is not something I've done for trading shares. I've certainly tried doing it for Forex, and for me, thinking I was going to be smart, that if a market moved one way and then it whipsawed back the other, that I had obviously both legs covered. Yeah, I learned pretty quickly that it knocked me out on one way, whipsawed back the other way, and meanwhile knocked me out of the second trade. So I ended up with both legs having a loss. So that was my learning in the Forex market of trying to do arbitrage. So I never went back to it again. I've actually just stuck more with trading the shares. But it's a great question. Great to do that research. And I love it when people bring these questions to me so that we can actually see what we can potentially do and help with your trading journey. So until next week, take care.